G'day expats and welcome to another episode of Expat Chat episode number 75 today. And as always, I'm joined by the guru from the Gold Coast, Mr. APAC himself, Mr. James Ridley. G'day James, how are things, mate?
Brett, very well on this side, and as always, joined by Brett Evans, the Managing Director for the EMEA region. Brett, how's the sandpit treating you today?
Mate, we had a bit of a scare. We got a bit of a warm temperature the other day, and we thought, no, it's too early.
Ooh.
But anyway, it's cooling down next week, hopefully. So it's I was just talking in the office to one of the ladies before, and it's amazing just how busy this place is. And she was referring to some numbers and Ajaris. Those who are listening in or watching, will know what an Ajari is. It's a registration of a rental contract here. And it's gone from 390,000 Ajaris to something over 500,000 in 12 months. So
Jesus.
It's a huge jump. So big pain that everyone's having. And I saw an article in the Fin Review the other day about cost of living in Singapore, Dubai, rents have gone up, dramatically. I think everywhere around the world has gone up dramatically. So we're all sitting there hoping that things will settle down a bit. But we'll see where it goes there. How's the land of interest rate rises and the impending doom that I keep reading about in the property market that the papers love to push around?
Well, I mean, those who might have been keeping track of Governor Lowe, he copped a bit of a grilling in Parliament this week where I watched it. It was interesting viewing. I mean, I feel for him, to be honest. He's got such a tough job, but right now, we've got to remember, he's the face of the RBA. On the RBA board, there's 9 other members. So he's not the one making the decision. In the event he wants to make a decision and overrule the board, he has to go to the Governor General and say, no, this is the right decision. Then the Governor General's got to approve it. So he's actually the face of the RBA. He sits on the board. They make a collective decision on each interest rate decision. So he said that right now, yes, interest rates will continue going up. People are spending still. So inflation is not expected to curb down as quick. His concern, obviously, is that fixed rate cohort where I think they said that, about 800,000 fixed rate mortgages are going to kick out very, very soon in the coming months. And he's like, well, if people haven't been using that cheap rate to ensure that they have the buffers to support an interest rate, which is going to kick out to 5%, that's not my fault. That's their fault. They knew that interest rates do go up. They change. Remember, you're signing a 25-year contract or a 30-year contract when you get a mortgage. Interest rates will never stay the same. So he shed some light on there. He said, obviously, I'm not the one that's to blame here. Blame the data, blame the world, blame the economy, blame everything that's going through right now. I've done my best. So it was really interesting. But yeah, interest rates still going up. He couldn't really give us, obviously, the pathway forward. He said, as always, will be dictated by the data. I think when you look at probably what the world is pricing in, and maybe currency traders as well, and the forward-looking rate, it's probably another 2 to 3 interest rate decisions, but again, driven by data. So we'll see what that inflation readout looks like. But in Australia, everyone is still spending. So it's not really slowing down that demand and therefore not curbing inflation as quickly. But I think later in the year, we'll probably see some interesting things on the property market. Things we've seen before, a bit of pain, but it's always that recalibration and reset given the new world order. Before we... And we're obviously talking about a bit of a market update here, but I want to drive into today's episode. Residency rules. I think when we dropped the poll recently in our Facebook group for expats, residency is obviously a big one. It's on everyone's tip of the mouths because we got that important update from the budget, and then it's sort of gone quiet. But then we see that the ATO released that draft ruling. So, and ruling guidance, I guess I could say. So I thought, why not talk about that? And then another example of a recent client. And that's about it. I'm just going to chuck it over to you for that legal disclaimer. But it's actually
your turn, mate. Your turn. I'm sitting here with popcorn. Go for it. It's all yours.
Okay, ladies and gentlemen. So anything you hear today is not to be construed as personal advice. It is for information and entertainment purposes only. Should you need personal advice, please feel free to reach out and get in touch with us. We're here to help. In the meantime, I think that'll do, and we'll kick into today's episode.
Nice, mate. I think I've just lost my job. I can take a seat back from the compliance regime and hand the reins over to yourself. So, mate, coming on, as you said, episode 63, we launched the petition. That was back in September, October, I should say. as an update for those folks out there, because we do get a lot of people in the Facebook group, and just for those on the call who are unaware, we have an Australian Expat Financial Forum Facebook group. Link down below if you want to join. More the merrier. There's over 1,000 people on there. We're all talking about finance stuff that gets our little propeller hats spinning. And the way that petition works is we obviously get the signatures. We present that to the petitions committee. They then present it to the minister who's responsible in their portfolio for that area. And then we get a reply. As of, we're, what will be the 16th of February, no responses yet. So we're still waiting, which essentially means they're trying to work out what's going on pretty much. And the legislation, or not the legislation because they haven't been drafted yet, but the premise or the Board of Taxation's report still sitting in the intro for the Labor government.
That's right. And I mean, the last sort of feedback or word that we got from the government was when Chalmers was in Singapore, I think, and Singapore or Hong Kong. And he said it's still in our...
No, you're right, Singapore.
Yeah. Yep. I was in Singapore and he said, it's in our in tray, and we're looking into the day count, the factor test. That's all we knew. That's all we heard. So that was a very long time ago now. So no further updates, and it is concerning because obviously a lot of expats want clarity around this 45-day factor test, the significant ties or economic interest in Australia and how that links you back and tethers you if you're accidentally breaching that rule. The recent, I suppose, draft ruling guidance provided the ATO. Again, it is just that it's under consultation, so you don't use it as the rule of law just yet, but it touches on the old residency rules already. So it touches on the 1936 Tax Act. The resides test is obviously at the forefront of that, as you mentioned, Brett, and then you've got those secondary tests as well. It's a very boring piece of legislation, to be honest, when you look at how old it is. I mean,
not sexy.
Going back that far, not at all. People were still using ships to get around back then.
Exactly. Getting your trunk and putting on the steamer.
Yeah, that's it. So, I mean, a lot of it we've covered before in previous episodes, and it's not that exciting. It's interesting that they touch on the resides test, and when you do download the actual draft ruling guidance, they've got a significant amount of examples in there. And I will say this, I've spoken to a lot of expats before, and you can sort of pick that expat scenario and probably apply it to some of these case studies. And you're sometimes shocked at the way that the ATO has lent. So it really goes to show that you really want to, when you're leaving Australia, you want to show that you're leaving Australia. You want to have the absolute habits of someone that is now living overseas permanently, and back in Australia, you've tied off all your loose ends. So making sure that, I suppose, before you leave, going through a very thorough pre-departure checklist, essentially, making sure that you're ticking a lot of those boxes. And that's what we talked about in the last episode, a bit of a pre-departure checklist and what you need to know. But there was certain things which kept those individuals tethered back to Australia in some of those case studies. Private health insurance was one of them, which is quite remarkable. So I guess when you look at the draft ruling, again, it's still under consultation. It's just a bit of an update from the previous one, going back to 1998, which is good. But I think we're all still waiting on, obviously, the modernising tax residency rules that's in the in-tray.
And it's interesting, you think that the ATO wouldn't have gone to the effort of updating the draft ruling if the federal government was going to come up with a new change. So to me, I mean, it's not to say they won't, but common sense, and sometimes it prevails, sometimes it doesn't. Common sense says you wouldn't do that unless there's something coming through the line. So I don't know. To me, it looks like, reading the body language, 2025 in terms of whether that comes through or not. Obviously, we'll find out more in the May budget this year.
Yep.
So it might be the first item, might be not an item at all, and we kick it on to next year.
Yeah, that's right. I mean, I remember last year when it actually came out, and they obviously mentioned the change, and then when we came across 30th of June, I remember there was that period that the ATO had actually pushed pause on residency rulings, because even the ATO was in the dark. I think it was up until close to September where they weren't doing any private rulings on residency in the event that update had actually was going to get legislated, which pretty much threw out the old rule book. Go, cool, we don't look at these rules anymore. We look at this new one that's getting developed and printed by the government. So it does go to show that there is obviously a bit of a disconnection there between the government and the ATO, that sometimes, even the ATO is not informed of what the the government's intentions are, or the Board of Taxation, which is just remarkable in itself.
Yep.
But I mean, going back, just remember that period where they weren't doing any private rulings. So it just created this uncertainty for about 4 or 5 months, to be honest, which was always a bit concerning.
No, you're right. And I think, to me, as I said to clients yesterday, today, tomorrow, keep working on the old rules until we tell otherwise. Yep. Yeah, there's always that concern of what happens if I go back to Australia for greater than 45 days this calendar year and they bring in the new rules. It's not going to happen that quickly. In order for them to do it, that has to be not retrospective in terms of the tax year. So it'll always be in a future 1 or 2 years in terms of that change. And then don't forget they have to pass the legislation as well, which can take 6 to 12 months. So we're still a bit of time off yet. So everyone out there on the call, just keep working on the existing rules until we let you know otherwise.
Yep, that's right. And I mean, you make an important point there, Brett, just about retrospective. And when we touch on previous rulings which have impacted expats, main residence exemption is probably the greatest example in recent years that everyone remembers. Yes, it was announced back in 2017. It took a lot of time for it to get traction. And when they finally came out and announced it 2019, December 2019, again, they said, cool, it's passed, all that sort of stuff. You still then had another 7 months before it was actually dropped. So it did give expats time to make decisions, but 7 months to make a very big emotional decision on the former main residence is huge. But not usually, I suppose, making it in hindsight and go, cool, if you're an expat as of this date from 6-10 months ago or whatever, it's going to apply now.
Yeah, definitely. And that's, I think, the biggest thing out of all this sort of stuff is, it's an evolving piece that hasn't evolved. So people need to just weigh that up and balance it up and see how that goes, because, we just don't know what the temperature or the colour of Canberra's money is yet. And until we get to that point, we'll just have to wait and see.
Yeah, that's right, Brett. Absolutely. So, I mean, it's a really good topic to touch on there. Obviously, it's a good read. If you haven't read that article in which Ben Turner, Director of Atlas Tax, has actually summarised for us, really recommend you jump on, have a bit of, that's right, jump on it, read through it, educate yourself, and hopefully we'll get a bit more of an update in the coming months, especially with the May budget coming through.
Sounds good, mate. Well, let's kick on to the next part of the show, and that is our client case study scenario. So what do you have for us today?
Yep. So this one is a bit more specific to expats that are in the United States. So typically, I guess that you could look at this for Australians or Aussies in the United States, or the other way around, US citizens or green card holders in Australia, because you actually have the exact same problem. You have to put up with the IRS, unfortunately, and the unique rules that the IRS places on you. So this client came to us last year. They had a very large portfolio of direct shares or share types, investment portfolio. And when they engaged the former investment platform and wealth manager, the wealth manager didn't take into account the fact that they were in the US, that they were a US tax resident. So unfortunately, their entire portfolio was only holding what we call passive foreign investment companies, PFICs. The intention of that client is to stay in the US for a very long time, probably the next 10 years. Because of the way that share markets performed last year, they wanted to essentially cleanse their portfolio and fix it up. So they didn't want to have to deal with this PFIC risk. So they engaged us to clean it up, do a bit of a rebalance into our Pan-Pacific portfolio. And essentially that just means no longer holding any PFICs and is completely compliant with the way the US tax system works and compliant with the whole PFIC legislation in the US. And now we're also helping them just around a bit of a retirement strategy as well. So that was a bit of an example of a client that we helped last year that had huge issues with information returns and PFIC tax return issues with the IRS.
And I think, and you hit the nail on the head when it comes to, just because it works for the Australian side, you need to make sure it works for the other side. And it's what we call two-dimensional advice. You need to consider both sides. If you don't, everything could be fine over here and this side's on fire. So certainly by all means, just because whoever you're working with says it's okay, validate them, make sure they understand both sides of the equation, because the amount of times, and it actually, makes me laugh, the amount of accountants and financial planners who subscribe to our newsletter and all these sort of things because they don't know. So, and they're not match fit. And from that point of view, I think it's just important that people qualify these people when they are making recommendations. Yes, they are licensed and regulated by ASIC. It doesn't mean they're conscious and understanding of what happens in UK or US or wherever it might be, because Denmark, great one, they do a mark-to-market on ETFs. You can have a portfolio of ETFs, Australian listed ETFs, and you'll pay unrealized capital gains tax on that. So just make sure you qualify that, because you can have good intent, but doesn't always map to good results.
No, absolutely not. And yeah, I agree. Making sure anyone that you're engaging is match fit. They've got a lot of clients already in the same boat, so they know how to deal with it day in and day out, rather than you paying them to go and work it out, if that makes sense.
You should be paying them to research. They should have that in their intellectual library, and it should be just execution.
Absolutely, Brett. So that's my client example for today, just to give the listeners a bit of an insight.
No, it's good. Well, I think we wrap it up there. We've informed the guests. We've updated them what's going on. So the old TLDR, too long didn't read. For folks out there, this is coming at the end, which should be at the beginning. No changes to residency rules yet. No updates from Canberra just yet. Carry on with existing rules.
Yep, absolutely, Brett. I think you've hit the nail on the head there. In the meantime, guys, thanks for dialing in for today and tuning in.
Fantastic. Thanks, mate. Look forward to seeing you next week.
Speak soon. Cheers.